I'm tired of going. Gotta keep going live. Market makers don't want y'all to succeed, bro. They don't. They don't, bro. All right, let me wrap up, man. Before I give y'all too much game again, man. Get my Wi-Fi taken down, bro. I don't got time. I don't got time. All right, man. Let me finish up this quick entry technique. So once again, we've taken out this low, okay? Asian lows gets taken out right there, okay? At this point, this is the entry that I'm actually trying to point out. So we know we also have liquidity up here. Look at how with this high, look at how with this high respects this high. Once again, supply and demand traders think this is resistance, so they're selling this, okay? So right there, low to high. At this point, if you miss this first entry at 6 a.m., this would be your second entry over here, okay? This right here would be your second entry. Price drops down to optimal trade entry. Price hits an order block, okay? So optimal trade entry, stop loss down there. Oops, let me fix my layout. Stop loss down there. And now you can go target the volts. You can go target the volts, or you can target this 50%, okay? So two entries, basically the same. One was a anticipated entry. The second one is a confirmed entry. Okay. Nice. Price hits TP1. Go ahead and take partials. Do not be greedy. And then you can hold on for TP2 because we know 50% is up here. Okay, right there. So that right there would have been your exit. Okay. But oh yeah, this was Friday. Yeah. So price on Friday did a crazy spike down. Oh yeah. So yeah. All right. So we done here with US 30, but look at this Friday spike. Look at how it goes and takes out that liquidity right there. Okay. Beautiful. But price is the 50%. Okay. So now going into next week, guys, for US 30 on this pre-market analysis, I now know that from high to low, from high to low, we had damn near the 50%. So now at this point, what I'm going to be waiting for is I'm going to see if price can still be bearish. So I'm going to look for price to come somewhere in this level. Okay. Mind you, this right here is a structure shift. So somewhere in this level, maybe wait for price to consolidate before price starts breaking down. Okay. So if price comes up here and we start consolidating, look at that. If price comes up here and we start consolidating and start breaking down, then I will look for sales back to the downside. Okay. So that's my analysis for US 30. If price fails to make a lower high, then expect US 30 to keep going up for buys. Okay. All right, cool. Um, I hope you guys enjoyed that back test session. So for gold, I'm not necessarily going to be so detailed in going through price action. Okay, but let me go ahead and do that. Let me go to a fresh chart. Let me use XAU. Actually, sorry. I guess I can use XAU USD. I use XAU USD. I like using the futures because it's one centralized market, but no problem. All right, so let's find our Sunday opening really quickly. So Sunday opening, weekly open, and weekly open. Okay. Let's go do ahead and replay really quickly. Okay. So now coming into gold for this week, what do we see? Well, first of all, we see that price is technically still bearish. Okay. Price came up here, took out highs, and this high pushed price down to make a lower low. Okay. So at this point, from high to low, this is the range that I am now monitoring. Okay, this is the high that pushed price down to make a lower low on the daily. So on the daily, we're still bearish. All we're doing is retracing, and possibly, maybe we're gonna get that lower high. Okay, so we're above 50%. We go to the 4 hour. On the 4 hour, what do we see? Okay, we see we have this fair value gap over here. We have this high over here. Okay, so on the 4 hour, I really don't see anything too clean except for this 4 hour fair value gap. Okay, which we technically close above it a little bit, but to me, we haven't like a full big candle closure above. Okay. Now let's look on the hour charts. On the hour chart, what do we see? We see that we took out liquidity up here. Okay. So I do like that. Okay. So we took out liquidity up here. Okay. Now on the 15-minute, all right. So now we have everything in order. Okay. We know we just took out highs over here, significant highs. Okay. And then now it looks like we are starting to break down. Okay. So this is the high. This is the low that took out liquidity and pushed price up to make a higher high. If we are truly bullish, this low should not get disrespected. Okay. You guys disrespected right there. Okay. So now at this point, we know that we can now be looking for bearish price action to the downside. Okay. Oh, wait, pause. Dang it. I wanted to highlight that. Okay, so now with this, if we go to the 15-minute, guys, now what I'm watching for is that this is the structure low that pushed price up to make a higher high. So this whole area right here can be used as a breaker. Okay. So I like to call that a landmine. So this right here will be a breaker. Okay. This is the low that pushed up to make a higher high. Once we close beneath it, okay, market structure shift, and then from high to low, did this come back to 50%? Not necessarily. Okay. Okay, pause. High to low. Okay, now we are the 50%. And now, so you see how we didn't have necessarily have to rush this? Okay. 50%. Okay. Always stick to your rules. Do not jump the gun. Okay. And now we have liquidity as well right there. Okay. Oops. There's there's the entry right there. Y'all see the entry right there? I'm gonna pause really quickly. Do you see the entry? All right, I'm gonna show y'all the entry now. Oh, is my camera on? Hold on. All right, cool. Here's the entry right there. 15 minutes for value gap. Boom! Get in right there, man. 15 minute for value gap. Stop loss above here. Okay. And now where are we going to target? We know we have lows here. That's a nice 3 to 1. Okay. But we know we have lots of lows over here. Okay. So we're right there. Yeah. So this right here would have been a nice trade. I'm thinking it should play out. Nice. 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 So at this point, once again, you could have taken partials. Okay. You should have taken partials. Boom. Boom. Right there. So once again, that 3 to 1. So this is only a Monday. Oh, this is actually what? This is Asian session? Oh yeah, this is Asian session. You know we don't trade Asian session. But this right here would have been some nice sells just based off of price action. Nice sells right there. Okay. And so once again, this is Asian session. So whenever you're trading Asian session, just to know that that move in Asian session is never long lived. It is usually not long lived. Okay. Okay. But that right there would have been nice one trade. Okay. Everything has logic. Okay. Everything has logic. High to low, 50%, internal liquidity, 15-minute breaker, uh, and then 15 minutes for a value gap entry for a nice 3 to 1. Okay. Now let me go to the 4 hour really quickly. Oh, because this is gold. This is not futures. Okay, that's fine. Okay, but now with this, guys, we are still. I'm still looking for. I'm still looking for more sales. Why? Because we have a market structure shift on the hour chart. All right. So now, I believe we are now coming into. Oh shoot! This is New York session. Okay, hold on. I fast forward too much. Okay. So now with us coming to New York session, okay. So all we've done, we went lower. Again, all we've done is built up liquidity here. Okay. And once again, from high to low. Okay. Until this high gets taken out, I'm still looking for sells because I know we have a nice market structure shift here. Okay. Right there. So now at this point, we have the weekly open over here. Okay. So the weekly open is always a key level you want to watch. Oh, look at that. Beautiful. Beautiful right there. Okay. And I believe that, let me quickly check SMT really quickly. I believe we did indeed have SMT. Okay. Guys, so I'm pulling out SMT. This is another bag. I didn't necessarily show SMT on US 30, didn't need to. But when I trade gold, I love to check for SMT. Now, the SMT happening here is look at this high. Look at how this high on gold is getting taken out. This high at 1730 is getting taken out. But look how on silver it's not getting taken out. Look right there. So gold takes out liquidity, takes out this high, but silver does not. That right there is SMT. And that all SMT means is that something fishy is happening. Okay. And once again, we know we're looking for sells. Something fishy is happening. We're now starting to close bearish. I think now is the time to actually take the sells. These sells were during the Asian session. Okay, that is not a kill zone. New York session is a kill zone. Okay, so we know we have SMT. Let's drop down to the 5 minute. Okay, so now what do I see here? I see this high getting taken out. This high is getting taken out. Okay. And now I know we're having another structure shift even on the lower time frame. Okay. Because this is the low that took out this low and made a higher high. If we're truly bullish, this low should not get taken out. It's getting taken out right there. Okay. This same pattern is the same thing that happened right here. Same thing on the lower time frame. So now with this happening on the 5 minute, you know that this little up move, this little uptrend has ended. All that's it's done. Okay. So now with this, you can easily take sells right here. So this right here will be the proper sell. Stop loss above here, right here. And then now you know you have equal lows down here. You have equal lows down here. Okay, look at this buildup of liquidity. So that right there, okay, that's 45. That's almost a 2 to 1. Okay, let's play this through. Beautiful. We'll go to the 15 minute. Oh, fucking beautiful. Okay. So look at how as soon as price closed that bearish engulfing. So sometimes, guys, this is why sometimes you don't even need to be on the 1 minute or the 5 minute. The 15 minute is really all you need. Once this 15 minute closed bearish, you could have just entered their stop loss above that candle. Okay. and you're cooling. Okay. But now mind you, this right here is a 4 hour fair value gap. So this is technically a 4 hour setup. So we know that we want, even though these lows are cool for a partial, we know this is a 4 hour setup. We need a 4 hour exit. 4 hour setup, 4 hour exit. So now, to me, I am now looking at these lows down here. Okay, I can be targeting these lows down here. Okay, so this right here would be my mindset, or my bias, for this to kind of go lower. Okay, we now have this nice 4 hour for value gap over here, and we have another 4 hour for value gap over here. Okay, alrighty. So look how price hits that 4 hour for value gap beautifully. So that right there would have been a clean trade. Okay, you don't even necessarily have to hold. We just hit a 4 hour for value gap, and we've just taken out this liquidity point. So right there, you can go ahead and exit. That right there is a great trade. No need to be greedy. Okay, but once again, you can take partials and leave runners. Okay, if in your mind, you're still thinking about the full long term move. Okay, so let's go to the hour chart now. Let's play this through. Okay, beautiful. All right, I think this is actually okay. Now, mind you, we're still bearish. Okay, so just because price is retracing doesn't mean anything. Okay, that's proper market structure: high, low, lower high, lower low. You know how it goes. All right, so now with this, I know we have a nice 4 hour for. Let me delete this one. I know we now have a 4 hour for value gap here that we have now come into. Okay, look at that right there. Okay, so now I am anticipating this 4 hour for value gap to deliver price lower. And this is also a 4 hour order block. Okay, this upward close candle that took out liquidity, 4 hour order block. Okay, so now on the hour, let's go down to the 15-minute time frame. So now 15-minute time frame. So now this is okay. So look, mind you, this is Asian session. Okay, so all Asian session has done right now is build up more liquidity. Lows, see, retail is thinking this is resistance, so they're buying this. So there's lots of stop losses beneath these lows. So now on here, on the 15 minute, so let's just on the 15-minute. So we know we're on the 4 hour fair value gap, and we know this is also a 15-minute fair value gap. Okay. So now I'm just adding key levels on top of key levels. Okay. With that, what else do we have? Did we come to 50%? Okay, close enough. Price is close enough. Okay. We're not trying to sell it down here. Price is close enough to equilibrium. Okay. And now, hold on. All right, cool. Oh, so what do we have right there, guys? We now have our shift. Look at how price is disrespecting this right here. Close beneath it. That right there is an indication. And now we're coming into London session. I usually don't trade London session, but guys, gold moves like crazy during London session. It moves like crazy during London session. Okay. So now I'm marking out this area over here. Nice 15-minute fair value gap. Okay. So now at this point, I'm anticipating sells. We can just enter right here. Stop loss where? Above this high. And where we're now going to target for our TP1 liquidity. That's already a 5-to-1. Okay, so this is going to be TP1. Let's go on the 5-minute really quickly. Oh God, this is beautiful. This is honestly a beautiful trade. Okay, 15-minute for a value gap, and we also have a nice 5-minute inversion over here. But entry, let's just go ahead and press some buttons. This trade is beautiful. Stop loss above here, risking $220. and then TP1 is going to be about $1,000. Okay, let's just go ahead and press some buttons. This trade is looking beautiful. Oh my, oh my, oh my goodness, guys, that's gorgeous. That's gorgeous, man. Okay, at this point, oh, we have lows down. Hold on, this could actually go stupid. Holy smokes. All right, guys. Once again, we're bearish. Once again, 4 hour for a value gap, 15-minute for a value gap. I have shown you the precise entry after a market structure shift on the 15-minute. Nothing here is being rushed. Everything has logic. This is how you need to trade. If you don't have all these confluences like this, you should not be pressing a button. Okay? You should not be pressing a button. All right. So what are we doing here? So this is still London session. Let's play through. Oh my goodness. Oh my goodness. All right, New York session. All right, so now in New York session, we're going to leave this. At this point, I'm going to put stop loss and profit. This is how I would manage this trade. Okay, stop loss and profit. Obviously, once price is reached right here, you should obviously be taking partials. Okay, so my bad. I probably should have taken partials, but you definitely want to take partials. Do not be greedy. Okay, because now you know coming into a New York session, guys, we just had a massive drop. Proper market structure is price has to come up, make a lower high before continue going down to make a lower low. Price is just not gonna. There's no major news. That's the only time price is just going to sink to hell when we just bombed, we just got bombed, or something like that. Other than that, guys, market structure. Okay, high to low, waiting for that 50%. Don't play every time. Don't play. Okay, prices basically hit the 50%. And then mind you guys, we are also we hit this 4 hour fair value gap right here. Look at how it kind of pushed price up. So now we have violated this. So now we can use this area as resistance to go lower. And not only that, check this out. Shoot. 15-minute fair value gap. Okay. So at this point, oh, it's beautiful. Guys, look at this. Now on the 5-minute. So guys, I'm just being nice and refining things down some more. I'm showing you guys how to read price action. No one else is breaking the charts down like this. I'm sorry. I'm sorry. Only at the equity highs, guys. So at this point, guys, TP1 always don't play. TP1 always equal lows. And then if price is really strong, obviously take partials. But we know we have major equal lows down here. So guys, if you guys were on here watching me break down US 30, you saw how US 30 kind of had the same equal lows and price sold all the way to take those equal lows before buying. Okay. All right, so let's go ahead and play through. I would press some more buttons, but it's cool. I'm going to put my stop loss above this high now. I'm now anticipating this high to be respected. Okay. So this is how you can stay in trades longer. Okay. Oh my. Good chicken. All right, so now at this point, what am I doing? I'm leaving stop loss. Obviously, you can take partials. So at this point, let's go ahead and take partials. How do you do that? Let me see. Let me just close half right here. We're up 2,600. Partials taken. Beautiful. And now on the 5-minute, okay, we know we just had another big drop. So guys, high to low, and we're just gonna see what that 50% do. Okay. Okay, and boom, just like that. Okay, so that trade got taken out of that trade. Let's see, did I miss? Okay, I clearly. Oh wait. Oh yeah, I missed that. I missed that. I missed that. I was even on the 4 hour this whole time. So guys, this area over here, this last three downward close candle before this big move up. Okay, that right there is an order block. Okay, so I had failed to identify that. This is why, guys, it's always very important to have your zones identified. Okay, you don't want to miss anything. Even though my eyes were down on these equal lows, you still can't ignore this fair value gap and this order block. Okay, so now going to the hour chart with this order block over here, look at how we now also have this low down here. So I failed to notice this. So once we made that lower low right here, right there, this right here would have actually been the signal to get out. Okay, this is a 4 hour order block. Okay, okay, and now with that 4 hour order block, as you see price now take these lows, another sign for you to get out. Watch this. Okay, so now I'm showing you kind of how like if in real time, if once price, you're monitoring price, when do you know maybe it's time to get out? Okay, guys, fair value gaps. You want to mark out your fair value gaps. Once price starts disrespecting fair value gaps, it might be time to close the trade and live to trade another day. Fair value gap that doesn't get touched over there, but the one that I want to highlight is this one. Okay, this is what I want to highlight. Look at how this fair value gap, boom, gets respected, makes price have a lower low. This is the high that pushes price down to make a lower low. If we are truly bearish, this high should not get taken out. It gets taken out right there. Close the trade. Close the trade. Okay? Close the trade. We've hit a 4 hour order block. We also had a 1 hour liquidity get taken out. Okay? And then we probably even had SMT at these lows. Let's see. Oh wow. Oh look guys, look at that. Okay, cool. Look at how this low over here, we necessarily don't take it out, but look at how silver basically came all the way to these lows. This is that same low on gold. Okay. So silver basically takes out liquidity at these lows, but gold doesn't even make it close down here. SMT, get out the trade. Okay. All right, so what's today? This is Wednesday. Let's go ahead and finish up the price action, and then we can now talk about what do you call it? Going into next week. Okay, so now guys, with this, before I continue on from this, I want to highlight something. Once again, I just drew this out on US 30, guys. Okay, price goes down, makes a low, makes a high, lower low. If we are truly what? Bearish, this low should not have gotten taken out. It gets taken out. Market structure shift. We are now bullish. We're now bullish. Low to high, guys, 50%. I'm not even going to go down to the lower time frame because I've did this whole thing. I've been doing it since I started this live. You guys should already know it by now. If you don't, you don't have to go down to the 15-minute time frame. Low to high, 50%. Buy it. 1 hour fair value gap. I will go down to the lower time frames. I'm nice like that. But right here, price makes a low, makes another low, price pushes up. You're looking for what? All right, cool. 15-minute fair value gap. That right there is your entry. This trade is happening Asian session, kind of close to London. Okay. But sometimes gold really moves whenever it wants to. Gold can move Asian session, gold can move London, gold can move New York. It's not US 30. Okay. That's why trading gold sometimes is very annoying because sometimes look at this crazy move it had during London. So by the time I'm waking up from New York, I'm like, dang, the move happened without me. You know what I'm saying? So, but this right there would have been the entry. Okay. Market structure shift. Low, high, 50%. 1 hour fair value gap. 15-minute fair value gap for your entry. There's a 6 to 1. Alrighty. And what does price do? This is what, Friday? Yeah, then this is how price ends. Cool. All right, guys. So let's quickly look at Friday's price action. So pretty simple for Friday. We know we have equal highs up here. Let's draw that out. That was your volt. Is it truly equal highs? Look at this right here. High, equal highs, right? Draw that out. Smacked. Get out the trade. Done for the week. So with gold presented about this trade was cool. This was Asian session. This was a quick, you know what I'm saying? This would have been a quick layup. Price drops, take partial, set break even. You would have made some type of money. You come into London session, the real session, you go ahead and take that trade. So nice 4 hour for value gap. Beautiful. Price retraces. If you're up during London, you could have taken another sell. Beautiful. And then a reversal trade. So one, two, three. Three really good trades. Okay. So guys, I'm not sure how many trades you guys take in a week. I don't know. If you're taking 10, 15, 20 trades in a week, you're doing something wrong. In a week, there are only about three to four good setups. 3 to 4 good setups. Three is the sweet spot. Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday. That is when you have the most volume in the markets. Monday, Mondays are always slow. Monday and Fridays. Fridays end of the week. Mondays and Fridays are always slow. Tuesday, Wednesday, Thursday, 3 trades. That's it. That's all you need. One, two, three. That's all you need. Friday, you can fuck around on Friday if you wanna. Don't You don't even need to. Sometimes Friday is choppy. Like, look at this price action. Like, what are you trying to do here? You're gonna get caught up. You know what I'm saying? But even though for Friday, low to high, low to high, okay, 50%, optimal trade entry, fair value gap. If you wanted to take buys, cool. But I believe on Friday, this wick was very dangerous. Yeah. Look at how price is in a range. This is why sometimes I don't trade Fridays. Price is in a range. You had no idea this was going to happen. You can get caught up. Okay. Nothing to do. Nothing to do. Okay. So now, what are my predictions for gold going into next week? Draw these levels out really quickly. All right, so let's start on the daily. So for gold going into next week, it's tricky. It's tricky. I say, let me see. See, gold is very tricky. Okay, we're 50% got respected. Gold is very tricky because if you really look at it, we're kind of in a range right now. You know, on the weekly time frame, we have just formed a swing low. One, two, three. So swing low has been formed. Okay, I do like that. Looking at this looks like one big drop. Okay, so maybe gold wants to buy. Yeah, this looks like one big drop on the daily time frame. Ooh, swing low, swing low, swing low. I might be leaning towards bullishness for gold. Let's see. We took these lows out. We bought up low to high, low to high. Optimal trade entry gets respected. We're pushing up. With that happening, let's quickly delete this. We have this nice 4 hour fair value gap that got respected. Hope you guys are following along. I'm showing you guys how I read price. 4 hour fair value gap gets respected. Liquidity failure swing. So to me, guys, I am looking. I might be bullish on gold next week. So what I'm seeing is obviously we see these highs be respecting highs. Okay. And then we know that didn't we have our market structure shift over here? We already had a market structure shift over here. So from this low to this high, this is the range that we're in. Okay. We even had a nice market structure shift over here. Okay. So I think I might be leaning towards gold bullish next week. I believe next week we do have what CPI. Let me quickly check. Yeah, we have CPI on Tuesday, guys. CPI is on Tuesday. Okay. And then we have Fed chairman is speaking on Wednesday. Then Thursday we have news. Okay, so yeah, it's gold is tricky. Gold is tricky. I said I want to lean towards bulls, but once again with gold comes what? DXY. So with DXY, let me go to a fresh DXY really quickly. Gold, you have to analyze DXY, guys. Don't be fooled. All right, what do I see on DXY? This low got taken out. Boom, 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 pushed up. We know we have lows up here. That basically got taken out. And then we have a nice weekly fair value gap here. It's tough. It's tough to be bullish on gold. Look how this weekly fair value gap is being respected on dollar. And even though dollar did kind of take out, it kind of took it out. But to me, I'm looking at this as equal lows. I mean, equal highs. Okay. And then just with that, we already had a market structure shift. Okay, look, check this out. This is the high that pushed price down to make a lower low. If we are truly bearish, this high should not get taken out. Gets taken out. Okay. So I want to say right now we are bullish, and then from high to low, we haven't even touched the 50% yet. Okay. So for gold, it's tough. I want to say bullish, but it can also be bearish. So with gold, that's something you have to take day by day. Okay. But we'll see if this weekly fair value gap can hold. In the case that this high gets respected, so now I'm watching this high on DXY. I'm watching this high and basically watching this low. Okay. Oh, we did kind of take out liquidity right there. Oh, that's true. Low, high. We took out this low, so we couldn't go touch these highs. So yeah, I'm bullish on DXY, guys. I'm bullish on DXY. So with that, might have to stick to gold bearish for now. But gold is tricky. Once again, it's in a range. I think gold is just something you have to take day by day. Okay. But right now, for gold, you just want to mark out where's liquidity. Okay. Where is your liquidity points? Let me close this down. Where's your liquidity points? Equal highs up here. Okay. We know we have liquidity up here. So markets is to open up Sunday. If prices maybe somewhat does something like this, and then maybe we can go to tag those highs. Okay, that's what I would possibly be looking for. I know we do have a 1 hour fair value gap down here. Okay, so I would say If you're trading gold, watch this fair value gap, okay, and then see if price wants to now go bullish from there, okay. If this 1 hour fair value gap fails, then that can open up the doors, for these lows, okay. But right now, I say we have nice liquidity points up here, okay. But once again, guys, if you're in the equity highs, I will keep you guys informed on gold throughout the week. Okay, that's one of the benefits you get of being in the equity highs. But other than that, guys, I think I'm done here, man. Gave you guys an insight into my bag, kind of how I read price action. Hopefully, you guys watch this. I think this is part 3 because I got cut off 2 times from my Wi-Fi. So watch part 1. This is watch part 2. This is part 3. Drop lots of gems, guys. Once again, just from this back testing session and me walking through price action on US 30 and gold, there were only like three to four solid trades. Okay, for the whole of this past week, 3 to 4 solid trades. So if you're over trading, obviously you must be on the 1 minute. You're taking you're doing a lot of trading. You don't have to do that. Don't stress yourself. Okay, with every trade that I showed on here and that we took together, we had about 4 to 5 confluences. Okay, higher time frame, proper kill zone, proper liquidity being taken up, high to low 50%. Okay, so I'll catch y'all this upcoming week, and then I'll help you have a good Sunday. Peace out.